For those traders who have asked and emailed, the 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both available in the link below in the description box. Again, high performance trading mindset is critical for increasing your competence and your ability to execute your trading edge in live time. 7-step daily routine for high performance traders is about bulletproofing yourself, discipline, confidence, and a winning mindset to master the markets. Again, the free downloads are available in the link below in the description box. Good day, traders. Stacey Burke from Stacey Burke Trading. A wild, woolly week in Perth. Crazy winter storms. Lots of emails over the weekend and a lot of emails this morning. Traders struggling to execute setups, still chasing moves in the market, getting frustrated, getting beaten up, asking me questions that are really broken down quite in detail in most of the videos. I'm going to reinforce this. Timing. If you are chasing moves and following candles, listen real close. Time of day, not impulse, chasing moves, chasing the candles, getting caught into garbage, piker movements. Understand what your setups are. So I talk about focusing on trading 1 hour a day, literally focusing on 1 hour a day, whatever that hour is for you. But I focus mainly on the New York equity markets, 12 candle window. The opportunities are in every session. Asia, 9 p.m. New York. London, 3 a.m. New York. And New York, 9:30 a.m. New York. Now, obviously, there are opportunities around these times, in the gap times, high and low of the week, high and low of the day. But in terms of you structuring a simple, reproducible, rinse and repeat schedule, I go to work in the U.S. session, and for me that's important because partly I'm going to be back in North America, but also by the time New York comes on board, I have all of the information on the board for the day. Asia and London, high and a low. Sometimes it's U.S. from the night before, Asia and London for a London trade. We saw that yesterday, but I want to reinforce sticking to easy, basic trade setups. Timing, high of day, low of day, levels. So traders get stuck waiting for something to go back to the high or the low, and they're actually already in the trade. Levels, 25, 75, and 50s and double zeros. So we look for trap volume at these quarter levels. Average stop hunt is 25 to 50 pips outside of the 100 pip box. Now traders ask, what about oil and NASDAQ? It gets, these 500 pip range days. You are still in a 100 pip box when the session opens. You are in a 100 pip box. That's what you need to understand. You could be down low in the 100 pip box. You could be up high in the 100 pip box. You might be in a quarter or a 50 pip box of trap volume at the high or low of the day or week. Trapped volume. Where is the money? So we are going to look at some simple setups. I talked about day one. Do not counter trend a day one inside. If it breaks out, we want to be at the high or low of the week because day one runners have a lower probability of reversing unless you are at the high or low of the week. Again, coming back to setups. My setups are pretty simple. Pump and dumps, dump and pumps, trend trades. That's it. I don't try to trade back and forth in a choppy little range so I can impress people and say that I got this gap and got that liquidity hunt and all these little things. I'm not interested in that. I'm looking for setups. Entry, stop loss, profit target. That's it. Now, really pay attention to this. Major red news, we've said this over and over and over again, will often act as a catalyst for a pump and dump or a dump and pump setup, which means payrolls goes vertical on a Friday night and they hold it up there. The first thing I do is I draw a line on Monday morning and I draw that level. That's all I do. Now I'm focusing on the U.S. session. We have peak formations, but the market breaks down. That's broken down. So for people who ask me, and I say this again and again, a broken down market is a market that has been moving in one direction, obviously up if it's broken down. If it's going up and it breaks down, we now have a broken down market. This pattern right here, we're inside. So obviously our target, so somebody asked me the other day, I said the blue tracer, the previous day's high-low, previous session high-low is always the target. What do I mean by that? That means that's where the money is. That's the target. That's the target. So the target is always about where the money is. Now people go, well, that's a liquidity hunt and blah, 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 blah. Okay, whatever you want to call it. That's where the target is. That's where the money is. No fancy names. Quit being silly. It's a high and a low. There's money there. They're going down to get the money. Now this pattern right here at the beginning of the session, this is it. You're coming to the screen. So people they ask me what's better, the 5 minute or the 1 minute. If I'm going to look for an entry inside of this peak formation and my level is 75 in the upper third of the box, does it matter what time it is? Does it matter what time frame it is? If I'm looking for something above or near 75 with a target at the previous day's low, which is a 50 pip box, remember I mentioned that you want 75 pips, 3 levels of rise, trap volume, break down, pull back, continue. This is the trend trade. This is the trend trade reversal inside back to the previous day's low. This is the easy money trade, the easy money low-hanging fruit. So we talk about 30 to 45 minutes in that first hour, locking in the high. Now listen again, 30 to 45 minutes. Now if you're in a move and you're trying to sell the high or buy the low with a high of day, low of day trade, think of it in even simpler terms. Sometimes if it's the first hour moving outside, it could be a 3-hour setup. 1 hour to break the high or the low, 1 hour to trap volume, and then the third hour to reverse or break structure and roll over or go back to the high. It's all about timing. So, just in simple terms, people have asked, why don't you use moving averages or anything else? I don't need a moving average if this is already broken down. I know that the market's broken down. I know that we're underneath of the moving averages. Visually, if you need that, there's nothing wrong with that. But again, we're looking for the fill price. We're looking for them to lock in a level. So I talked about where can you add size, what type of setups. When there's a breakout back up inside and we've already locked in the high, this area for me, okay, and again, this is the middle hour right prior to the New York Open. So just coming back to simple setups, broken down market, we're targeting where the money is. It's already broken down. They've put in the peak formations. We're looking for a fill above 75. Doesn't matter if I use a 1 hour chart. I'm looking for a fill above 75. Now coming back to whatever time you're trading in terms of the sessions, it's important that you have a basket of instruments that you know are going to be moving in that session. So the beginning of the day for, the Canadian dollar obviously is going to probably trade more frequently in terms of setups in that U.S. session. So that gives you an opportunity to look at Asia and London, peak formation high, peak formation low. That's our textbook setup for the trend trade coming outside of the rectangle. That's a rectangle. We have a 50 pip box. They've already broken down. We had trap volume in the upper third. That's a 75 pip. 3 levels of rise, peak formation above 50, the highs locked in, trap volume breaks down, pulls back above double zeros for the explosive move back to Friday's low. So US session, I will look at all three of the US crosses. Japanese yen. Again, if you're going to trade Asia, I would be looking at the Japanese yen because there's a high probability that it will trade in Asia. Now, we have peak formation high at the close of Friday, peak formation low under double zeros. So there's your 50 pip box. That's the high of the day. That's the low of the day. They're working into the low. They break structure, creeping down into the low for an explosive trend trade for traders who wanted to follow through on the long trade. Okay, but there was also an opportunity at the high of the day for a 25 to 40 pip scalp back into traders that were long. I talked about this trade setup in a previous video. If you had only traded this one setup, that was the only pair that broke the previous day's high in the Asian session. Now I follow a basket of 4 instruments and 4 and 2. Aussie yen, yen, pound yen, euro yen, and oil and gold are always on the side just to see if there are setups. But this is a simple high a day trade. So they're going back to break the high, trigger breakouts at the high of the week on a Monday. High of the week, 3 pushes, end of the hour, 45 minutes, 30 to 45 minutes, and the high should be locked in. They pull back into the high. We have our high bull candle, highest bull candle, break in structure, pull back up, and there's our pin hammer for the short trade down. If I was trading London, again the same process. I look at the euro, the pound, euro yen, pound yen, oil and gold. Now, if you're inside, again, a simple little common sense thing to look at is who's trapped. We have volume trapped on Friday at the high of the week. But we also have a market now that has gone outside of the 100 pip box through the peak formation high of the US session. This becomes the high of day. This is the low of day. They trade back into the low of the day. Now, for traders who struggle with this concept, as the US session trades lower, it makes peak formations. It makes a higher high, but that is a peak formation high down low. That's the high of the US session. That's the low of the US session, the last low inside of the low. So now we have a market that is a creeping trend into the low in Asia that reverses. So remember, coming to the screen for a session. So if you're coming to the screen to trade Europe, you want to look at the euro and say, okay, there's the high of the day, there's the low of the day. They've gone down and put a peak formation low in and gone sideways. Sideways coil inside of the peak formation. Do not countertrend the peak formation down low for a vertical move up. But then we also have the opportunity for short traders. So we have the creeping trend down 30 to 45 minutes. 30 to 45 minutes, they lock in the low at the quarter level. So remember, timing. So for traders who are getting caught and getting stopped out chasing things, start watching the clock. Pay attention to time. We get a long trade. London Open breaks the high, triggers breakouts, proceeds to auction higher. 30 to 45 minutes at the equity market open. High bull candle. Break in structure. We have a market now that has put a peak formation in above double zeros. No, I'm not trying to sell the high. But timing-wise, we're at the end of the hour. But traders who want to position themselves for the reversal at the levels, the round number levels, we have a market now that has put in a peak formation high. Now I'm going to zoom in on this. At the high, what do we see? 1, 2, 3 before it engulfs and breaks down and pulls back. New hour, we want to get filled above the numbers. So after this market breaks down, I don't care what happens. I'm getting in above the numbers. My stop is going right there as a maximum stop. When it breaks down, I will lower my stop to either break even, depending on my fill price, or to that lower swing high. Where's our first target? Our target's going to be a minimum of where the lift comes, the lift in price. They lift the offer. That's right after the London market has opened. So there are opportunities in both directions, and also understanding that once you take the trade, somebody asked yesterday, I said lock in the profits. Do you mean go to break even? No, break even doesn't make you any money. I mean lock in the money. Got some really good questions about when did you decide to trade full time? What do you like to do in your spare time? What is your setup like? I'll do a video on that. I've talked about my setup before. It's very straightforward. I have one large screen and a laptop or a small box, desktop box, and I tend to just look at my large screen and then narrow it down to one or two, and then when I am going to take a trade, I have that one pair on my screen, and that is it. I don't try to follow everything all at once. I've got, I'll look through the majors, the U.S. pairs, the Asian crosses if I'm going to trade Asia, and then oil and gold, NASDAQ, S&P for the New York session. And often I am just looking for one simple trade. I will take one simple trade as opposed to trying to, catch a whole bunch of moves. But I just keep saying over and over again, timing. Okay, and again, you just heard me say 30 to 45 minutes in that first hour. Now, if it's an explosive trend trade coming out of a squeeze, 3-session squeeze, or a coiled explosion for a trend trade, you can get a move in first hour. But that first hour typically will be a 30 to 45 minute move, and the equity hour is critical. It can take you in the wrong direction, or it may actually be the continuation move for a trend trade or the reversal. High day, low day, the levels, 25, 75, 50s, and double zeros. So people get caught up sometimes and misunderstand that they're waiting for them to go to the high and the low. They may have already locked that in previous day, previous session. Again, payrolls, classic example. Explosion. That's the classic textbook beginning of a 2-3 session pump and dump opportunity. Trap volume. Whenever you see an explosion on news, traders are forced to enter further away. Now, sometimes that's a catalyst to complete a move or to begin a move, but if it's to the high or to the low of a week, often that forces traders now to be entering into the market at the high or the low and getting caught, or even if they take a scalp, that volume now is trading further away heading into the next day. So then you want to identify what are your best setups. So I'm looking for simple stuff. Pump and dumps, dump and pumps, or trend trades. That's it. Then you put your entry in, your stop loss, and a profit target. Step back, let the trade go play its fruition. If you're locking in profits in a larger move, you're taking some off. Your positions are a break even if it breaks through levels. And that's it. They should be moving without any heat. So within 15 minutes, your trade should be showing you some confirmation of that move being in the right direction. So keep it simple, traders. Day one, we're heading into day two now. We saw some great opportunities yesterday for a Monday. Again, keep it simple. Have a great session today, and may the markets go with you.